The broadcast is now starting. All attendees are in listen-only mode.
All right, so good afternoon, everyone. It's almost 1 o'clock Chicago time. I am going to start the broadcast early just to get some of the disclaimers that I have to go over first. This way we can spend a good, clean hour looking at the markets, going over the setups, making some observations, those kind of things. Okay? Today is November 29th. It's another episode of CFRN Thursday, where we go over the CFRN setup in slow motion. For those guys that are brand new, this is going to be a good syllabus for you when you enter the training room. The training room is from 8:30 to 10:30 every morning, Monday through Friday. Mike is the moderator. What has happened over the years is a lot of time when people take the trial, a lot of things are going on in the room. They're seeing a screen like mine, and things are moving fast. Mike's taking trades on and off. He's got a goal to accomplish, and sometimes you just get overwhelmed with what's going on. So what I did is I kind of listened to what was out there and said, you know what, I'm going to slow it down for everyone. So everyone's got the rules. I get to know the setup, break down the rules so that when you get into that training room, at least your eyes are wide open and you're kind of absorbing what's going on. Because after 5 days and the trial is up, you will get an email from CFRN and they'll say, hey, to sign up now, the price tag is X. And I think at that point, at least, you've had a good understanding of what's going on, what the setup is, what the buzzwords are. I would take it a step further, and they encourage it too. Download the platform, download the indicators. If you have problems with that, that's what I'm here for. All right. And while we're doing that, we can go over the setups too. So we can do more of a one-on-one personal mentoring if we have to get you up to speed. All right. So again, for you guys that are brand new, this is a great way to start, especially if this is your first or second day. The returning CFRN members, I'm glad you guys are here. That means you need a little, maybe you might need a little help. This is your chance to ask questions. I'm going to observe the markets from my point of view. They'll be very similar to Mike's. I look for some things that might be a little bit different. I'll use the terms like easy and obvious, where I like to have everything set up in the right direction. Again, I'm going to make some observations throughout the process here, because a lot of times I'll get emails and screenshots from guys, and they'll say, hey, what do you think about this trade? What do you think about that trade? And what I'll do is I'll critique what you're doing. And so I kind of see some of the same mistakes happening over and over and over again. So the purpose of this hour is to, hey, you know what? I've seen people make the same mistakes. Here's what I would try to avoid so you can, avoid being a casualty of the markets. All right. And some people just need to come in here just to get a little bit more confidence, which is great. You'll get to get a little bit more screen time, and you'll get to learn the personalities of the markets that we're trading, and that's a big, thumbs up. All right. So that's the game plan. So what I'm going to do is I'm going to go over the disclaimers. Number one. Number two, I'm going to go over the rules. And then number three, what I'll end up doing is going inside the market here in real time, and we'll take what we learned, just the simple rule setup, and then apply it in the marketplace. I'm going to go inside the DOM. I'll put trades on. I'll take them off. I'll show you how to manage them, just like CFRN will do. So we'll have some things to do. I know the Fed minutes will be coming out in about 5 minutes, so we should get some volatility. All right, so hopefully we can get our feet wet a little bit and get some action. So I'm going to shut down the live. And I'm going to stay in demo mode. All right. Now, I am manning the phone still, so from time to time my phone's going to buzz. All right. So what I'm going to do is just give you advance warning. I'm going to hit the mute button, pick up my other line, and then I'll pop back in. But I just want you guys to know that's going to happen. Okay? Okay, a little bit of water there. And let's get rolling. All right. So as I said before, I have to go over the disclaimers, and there's 2 of them that I go over every week. And I don't like to throw the disclaimers up and then throw them back down. I do like to go over them because, I've been doing this for almost 25 years, and I've really seen the good, the bad, and the ugly. And the disclaimer really is here to scare really the new guys that are entering into our space. Mostly the guys that get to CFRN, they've been wounded, they've been through the battles, they've been to this guru, this system, this guy, and they've been through the circle a few times. So the disclaimer really is they're kind of numb by it because they've been beat up already. The guys that are brand new, because we get, they get some brand new guys in the room. Basically, the disclaimer is there to kind of scare you, all right, bluntly scare you. And basically, it says, look, you can fund an account and you can lose everything and some in your trading account if you don't have a trading plan, if you don't have a stop loss, if you're not watching the markets, if you're not watching over the account, if you're not in front of the screens, if you just turn your back and away from the markets and you don't have a plan, this disclaimer is going to hit you right smack dab in the face. So it's there for a reason, all right? This is a leveraged game, and if something goofy happens, another tweet comes out or something in the world that pops up, the market could go, into a tailspin or do something goofy, and you can be doing all the right things. You can be placing a stop. You can be in front of the screens. You can be watching over the markets, but in the end, something doesn't happen. If something does happen in the world and, you're not paying attention, what have you, your account can go debit. All right. That means if I fund an account with 5,000 and the market does what natural gas did a few weeks ago, you could owe the house. All right. That's what that means. And we'll be collecting just like any other bill. Okay. So the good thing is with CFRN, you're going to have a set of rules. You're going to be using stop losses. You're going to be using aggressive risk management. That means you have to be in front of the screens. That means you have to be in front of this DOM. The DOM, the depth of market, is this tower that we buy and sell from. Okay? If we think the market's going up, we'll left click in the green. If we think the market's going to go down, well, we're going to left click in the red. And if the prices go up, we make money when we're in the green. And if we're short and the market goes down and we left clicked in the red, we're going to make money on the downside. So the bottom line is, you can, if you go down the CFRM path, you're really going to be engaged in what's going on in the marketplace. And this warning label that I just threw at you, again, could water it down a little bit, but in the end, if you are doing all the right things, there is a possibility of that happening where the market hops over your stop. It doesn't get elected. Now you have unlimited risk. But the good thing is that you'll be in front of the screens. And if all fails, all you have to do is hit this hotkey here, exit at market and cancel, and that'll get you out right away. It'll cancel all your orders, all your stops, this hot button here. Okay? So that was the long-winded explanation of the first disclaimer. It's really meant to scare the new guys, but it's something to talk about. Don't like to ignore it, but that's a scoop there. All right. my relationship with CFRN. Okay. Bottom line is this: CFRN, they're the educator. It's their indicators, their trading tools, their school, their methodology. Okay. They're the third party applicator. Okay. How do I fit in? I am the platform. Okay. I support the platform, the brokerage, the execution, the support on that end. So if you decide to go down the CFRN path and you say, hey, boy, I wanna get the same platform that Michael and Dwayne are using because that's the one I should be on, you would contact me. I would set you up. I would get you up and running. I would turn your indicators on. If you had questions, you can rely on me to answer those questions. Again, if we had to do a personal screen share just to get you up and running, that would be the game plan. So I support the platform, the execution, and the brokerage side. Okay. What had happened over the years, about, let's say 8 years ago, CFRN was just the radio program, the program that Dwayne still does in the afternoon. About 8 years ago, he invited me to come on the show and, talk shop, talk about the markets, answer questions, offer some opinions on where I thought things were going. Okay, that's how it kind of really kick-started. Well, over some time there, people kept asking Dwayne, hey, teach us a little bit more. What's this line? What's that line? What are these weekly trading zones? How are you coming up with them? In the end, with so much demand, he teamed up with Michael. They are TradeStation developers. They got this together. I said, hey, you know what? Believe it or not, my platform reads easy language. The platform is free. There's no cost to your subscribers. And they coded it into the platform, and here we are today. So that's how it started. All right. So the bottom line is this. Okay. If you go down the CFRN path and you're going to hit the PayPal button, the questions will go directly to them. Okay. Anything on their website, the members area, the videos, the work night, Thursday night workshops, the Logic 247, the concierge trades, all that other stuff, your communication is between you and CFRN directly. Okay. If it pertains to the platform and getting the demo running, hey, you want to open up a brokerage account, you can rely on me for that. Okay. I know I'm in the room every single day. I'm kind of in the background, just observing. If I get some questions that I see in the message box, I'll reply. So I know sometimes, I kind of get lumped in with CFRN. The big plus sign with that is this. I know the trade setup. So if you need help, you have a phone number to call and a live body will pick up. Our competitors, they don't. You have to exchange emails. Okay. So it's nice to know if you call 866-928-3310, I'm going to pick up the phone. And if you have questions about the setup or the platform or anything else, I'm qualified to answer it. Okay. So that's disclaimer number 2. Okay. There is a line in between us. All right. So that's the scoop. Let me clear my throat. Now we're going to go over the trade setup. And as outlined in this template here, there really is just 4 simple rules. Okay. But I'm gonna cut them up in detail. And again, if you're brand new, this is going to be a great place for you to ask questions. This is going to be a great syllabus because this is the setup. This has been around from day one. Okay, if you notice the chart here goes back to 2012. Okay, so nothing has changed. One of the questions I always get, has things been tweaked, form fitted, changed over the years to kind of correlate with the markets? The answer is no. Same setup has been around from day one. Now, other setups have kind of originated over the years. That was just members observing what was going on, using indicator sets and saying, hey, Mike, Dwayne, have you noticed this? Have you noticed that? And the 139, 137s, the 164s, all these other trades kind of popped up from that. So this one has been around from day one, so that's why I talk about it, because, you know, it works. So once you understand this, then if you're doing the logic 247 and some of the other stuff that they're executing, then that's going to give you a clearer picture on how to execute that. Okay. So the first order of business is the time frame. Okay. Outlined here, we're on a 4-tick range chart. All right. So what you're doing really is you're looking at the market under a pretty fine microscope. Okay. Now, if you have DTPro, chances are you're probably on an hourly chart, might be on a 5-minute chart. You'll be most guys are on a time-based chart. Okay. So what you do is in the left-hand corner of the chart, there's a little drop-down box next to the time frame. Just left-click on it and go down to custom. Another box is going to open up, and you want to select range bar. Make that one look like a 4, and then you're on the correct time frame. One of the biggest traps that people fall into, because CFRN is always talking about getting your goals in ticks and your stop loss should be in ticks. What they'll do is they'll go down to custom, they'll select the tick bar, and they'll change that to a 4. You can see the big difference in the crude chart. That's a tick chart. That's a range chart. So a big difference. It's real smooth. All right. So you want to be on a 4-tick range chart. And there's some advantages that I will talk about in a little bit about the 4-tick range chart. But the bottom line is that the height of each candle is always going to be 4 ticks in height. So when you're inside the room and Michael is calling out highs and lows, he can actually be a little bit proactive, predictive in placing orders. Because what he's doing, he's actually buying and selling the market sometimes on stops, okay, with some momentum. All right, so there's my first phone call, so stand by. All right, so I'm back. All right, so again, the advantages of the 4-tick range chart is that we know the height of each candle is going to be 4 ticks in height. All right, so when Michael is talking about the highs and the lows, the magic formula for you is just take that number and add or subtract 5. It's going to be that number in which you go inside the DOM and click. Okay, if you're buying it or you're selling it on a stop, you're going to be right-clicking in the DOM, right-clicking, because you're going to be buying it above the market or you're going to be selling it below the market. Okay, I'll go into that. If it does happen in real time here, I'm going to start calling them out as Michael does, and I'll place the order in front of you so you guys get a sense of what the heck's going on. Okay, so again, that's one of the advantages of the 4-tick range chart. Okay, so first order of business, the time frame, 4-tick range. All right, so we're going to work on the top portion of the chart right now. Okay, so here we go. The red and blue line is referred to as the MA1. Okay, the red and blue line. Let me get the question box in front of me. All right, the second, the green line, is referred to as the BBC. That is short for bullish and bearish cross, the BBC. What's important about the two leads us into step number 1, okay, which is this. Step number 1 is we're looking for the bullish or bearish cross. So when the MA1 crosses the BBC, or that red and blue line crosses the green line, That is the first step, or that is the cross. All right, we're looking for the MA1 to cross the BBC. Okay, now from this point on, I want you to be thinking about color. All right, so if the MA1 is red, I want you thinking about looking for selling opportunities. If the MA1 is blue, then you're going to be looking for buying opportunities. So the one that's highlighted here, okay, this is a bearish cross because the MA1 is what color? It's red. Okay, that's going to be important as we go down the line here, because in the end, we're looking for everything to be the same color. All right, so again, everything starts with the cross, the MA1 crossing the BBC. Okay, that's the first order of business. All right, second, at some point after this cross, the normal thing for the market to do is to gravitate or flag or move toward that BBC, as it does here. That's what we're expecting, the normal thing for the market to do. So you're looking for the market to challenge the green line, touch it, and then close in the direction of the trend. We identified the trend being bearish because the MA1 is red. So we have a red MA1, and now we're looking for a red candle. Okay, that is step number 2. Okay, we're looking for the normal thing. Now, sometimes the market has so much bullish or bearish momentum, it won't get to this green line. It won't get to the BBC. So what you're going to hear me say today, and what you'll see Michael do a lot, we're talking about getting in the habit of drawing trend lines. Okay, because if the market has so much momentum to the bullish or bearish side and can't get to that BBC and does violate that trend line, you want to be in the position to take action if everything else fits. All right, so you got to get in the habit of drawing those trend lines, and you're going to hear me talk about that over and over here in the next 45 minutes. All right, so again, the normal thing is for the market to gravitate toward the BBC, and then we're looking for a close in the direction of the trend. All right, so that's step number 2. All right, step number 3, we're going to look at the oscillator portion of the chart, okay, which is called the slingshot. Okay, so some buzzwords going on down there. Okay, the slingshot. The red and blue line is referred to as the cycle. Okay, the green line doesn't have any fancy names. It's called the green line. What's important about the two is the space in between here. The space right here where the arrow is. That is referred to as the divergence that Michael is talking about in the training room. He's calling it separation now. You can call it divergence. But here's the bottom line when it comes to the slingshot. Because the trade exists down here. Okay, so pay attention if you're new. The cycle. What color is it? It's red. We want it to be red, right? Why? Because our MA1 is red. When it crossed the BBC, that's red. And the market did the normal thing. It went to the BBC. It touched it. And guess what color that candle is? It's red. So what should we look for the cycle? What color the cycle should be? It should be red. All right. So what this is telling us is, look, on this time frame, the 4-tick range, that the trend is down. Okay. The cycle is telling us the trend is down because it's red. Okay. The green line pulling away with the market action up here, all right, is implying, look, this little pop-up and the down close might be just a little pop-up in this ongoing downtrend. All right, so this is setting the tone. We're going down in this time frame, and combined with the market action here, when we have a close after the cross and we have this space in between us, the divergence, There's nothing really left to do but to get inside the DOM, okay, and get short or take action. All right. And what we would end up doing is if it created a shorting opportunity, we would left click in the red, and that would activate a short. Okay. We make money as the market goes down. If it's a bullish cross and a bullish setup, and we get bullish divergence, everything is blue, then we would left click in the green. And if the market goes up, well, we make money going that way. All right. So the bottom line is this. The trade setup exists down in the slingshot. Because in the end, here's what we expect to happen. The cycle is going to go down, telling us the trend is lower. Okay? And with the green line pulling away, combined with the price action up here, is saying, hey, get short the marketplace. Because what we expect in the end is this green line to ultimately come down and close the gap or touch the cycle. And it's at this point the market should come down and make a new pivot low. Okay? That's what the normal thing is for it to happen to do. And it's at this point here we're closing out the trade. Because what we expect to happen down in the slingshot is the green line to do this. Close the gap, pop up. Close the gap, pop up. Do this until guess what? That cycle now is blue. Now the trend is what? Bullish. And now the green line is creating bullish divergence. The green line should be underneath it. All right? So in a sense, you're selling this pop-up, selling this pop-up, selling this pop-up, buying this dip, buying this dip, as long as the market is doing what? Trending. We're making higher highs or we're making lower lows. That's the trade right down here. Okay, it exists here. So in the end, if you are brand new, you're not learning. If you go down the CFRN path, you're not learning to predict the top and predict the bottom and trade from point A to point Z. What you're learning to do is take a piece out of the middle. All right? You're going to take it from these 2 points. All right? And every trade has an 8-tick stop attached to it. So if I'm brand new, what does that mean to me if I'm dead wrong? Well, if you're trading the gold or the crude, that's $80. If it's the S&P mini or the beans, it's closer to $100. Okay? Again, along the way, we use aggressive risk management where we are going to trail our stop behind the market. There's a set of rules for that. Okay? And I'll go over them if we get into a trade. All right? So really, what you're signing up for is scalping the market, aggressive risk management, being engaged in the market. You're going to have a lot of stop-ups, stop-outs, a lot of trades, maybe a lot of break-even trades. Some of those trades where it gets your stop and then goes down in the direction that you originally were positioned in. So that's what you're signing up for. Okay? So that's a scoop. That is the setup. So what we're going to do is, then, like I said, the next 45 minutes, we will take that same setup and we'll pop into the market and see what we can do. Okay? Any questions so far? All right. So here we go. I'm going to start out with the S&P. Okay? All right. So as I said before, okay, we need to get the first order of business. All right. Are we trending? So here's what I want you to do. Okay, first order of business is get in the habit of hitting the zoom out button. Because sometimes what you're going to do is you're going to see this. Okay, really going to look at the market under a microscope. Okay, Michael's charts are kind of set up this way where you see a really small column of charts. Okay, What I want you to do is to get in the habit of zooming out. A few ticks, all right? Because that'll allow you to look left, okay? You'll get to see a little bit more real estate over here, okay? Because you can see we were trading sideways for a long period of time here, and it was just after the Fed minutes where we just started trending up, okay? So that is something it's important. You got to get in the habit of zooming out. So I'm not asking you to change time frames and do all that other stuff. Just get in the habit of zooming out, okay? Now, as I said earlier in this little diagram here, the normal thing is for the market to gravitate toward the BBC and react off of it, right? Well, we saw this happen right here, okay? Here's an attempt at it, but took off. So again, reasons why we draw trend lines, okay? That's a good reason, all right? So we have the same thing happening again, okay? So this is the trend line, okay? And that is, again, the close above the trend line, all right? So again, the reason why we are drawing trend lines, number one, we never know if it'll get ultimately back to the BBC like it did here, okay? If it doesn't and closes on the other side, and we have bullish divergence down here, that means the cycle is red or blue, and the green line is underneath it, then it's time to take action, okay? That's why we get in the habit of drawing trend lines, okay? So this one has already started moving a little bit, so I was pointing that out because you're going to see me talk about this over and over again. So for the moment, okay, until the S&P makes a new swing high here, we'll look at maybe getting long the S&P, but we need to make a higher swing here. So I'm going to change to the gold, see what's going on there, okay? Again, a few observations here, okay, without even looking at trend. For the new guys, bearish cross, MA1 cross on the BBC, so you're thinking sell. Normal thing for the market to do, gravitate toward that green line. It does here, and guess what? Closes in the direction of the trend. So we got the red candle, okay? Our eyes gravitate toward the slingshot. What color is the cycle? It's red. Where's the green line? It's above it. So we have the space in between. There's the divergence we're looking for. There's step 3. Step 1, step 2, and here's step 3. And guess what we expect the green line to do? Go in and challenge the cycle as it does here. And it's at this point here, you're closing out the trade. Because what do we expect to happen? Again, the green line to pull away and do this and do this, okay? So that's after the fact, good stuff. It's got all the variables there, okay? Again, I want you to get in the habit, zoom out, and look here, okay? The question is, were we really trending here? The answer is no, we weren't. So it had everything, all the great stuff in here, but me in real time, zooming out, I would have said, you know what, we're trading sideways here. It's not until really now we're starting to break out of this little box here, all right? And if you're not sure about it, hey, if I'm not sure about the trend, the dynamic support and resistance dots, support, resistance, prior highs or prior lows will tell you a lot, okay? If dynamic support and resistance are side by side and they look like choo-choo tracks here, then that's one clue that says, hey, we're trading sideways. That means no trade, no matter what the setup is. You're not buying or selling anything. We're trading sideways, okay? So if you're not sure, when in doubt, stay out. And number 2, if you're not sure, look for the support and resistance dots, all right? And if they're side by side, then that's a no-go, all right? That's a lot different than the S&P chart we just looked at, okay? Where we are making higher highs. There's a big difference, right? Again, we had a box here. Now we're making higher highs. Okay? All right. So what does that mean? That means, number one, the market needs to be trending before we do a darn thing. So before we push a button, you better be making higher highs or lower lows. All right. Now I switched guns on you again. I went back to the S&P because there's going to be something popping up here I want to talk about. Okay. So again, the market is starting to pull back to the BBC. What's the BBC? This green line. And that's how I would draw my trend line. That's how you should draw yours. It's off the top of the wick and off the right body. Okay? All right. So, ideal scenario is for everything to be the same color. Okay? There is the close above the downtrend line. Okay? In theory, that should activate a long, okay, in the S&P. But look at the slope of the cycle now. It's red, number one. So the trend line is required, and a close above the trend line is required. But here's one of the biggest traps that people fall into. Okay, they get hypnotized by this, and they're thinking, ooh, I finally got a setup I want to get in and get me long. Okay? In fact, I did just that. Now stay with me because I'm going to make an observation. Those guys that are CFRN members know what I'm going to talk about in a second. Okay. So let me push a button for somebody, and then I'm going to talk about this, okay? Because this is the trap that people fall into. Let me get rid of this. Sorry. I want to make a point here. Okay. Oh, come on. Okay. All right. Here's the scoop. Okay. This is the trap people fall into. Here it is. You get hypnotized by that close. You're like, all right, I got one. Okay. But I just told you about this cycle being red. That waters down the probability. But number two is look at the slope. It's moving against you at a 45-degree angle. That is a big fat disqualifier. Okay. That's a warning sign that the market is stopped going up. Okay. So the reason why I put the order on was, number one, show you the trap that you're going to fall into. And number two, to highlight one of the things that usually happens is that when you see or get faced with this, okay, you have to just ignore that trade. Okay, that's a disqualifier. All right. The other thing I wanted to point out too is the DOM. Okay. The guys that are brand new, what we were able to do is actually get into the market, and hitting this little circle here, this triangle, allowed us to place a protective stop right away. So it placed the stop for us. So we didn't have to push any buttons. We just got into the market, and it placed the stop automatically 8 ticks away. So you're not doing any heavy lifting at that point. Okay. It's just one click of the button. Okay. That's called a bracket order. Okay. So that's what we were allowed to do. So not only did I want to highlight that point, but what's going to happen next is we could potentially get stopped out, because this is one of the traps that you fall into. Okay. So sometimes you'll get lucky. You will buy this and you'll have this little slope, and the market does go up, and you'll say, man, that's great. I made and made dough on that trade, most of the time that will backfire on you. All right. So please keep an eye on the slope. We want, and the color. We want everything to be the same color. So if we're buying, we want everything to be blue. Okay. And if we're selling, we want everything to be red. It's okay to take trades if the cycle is red and flat, just like it is here. What happens is when this turns red, this trend line needs to be drawn, and it needs to close above or below that trend line before we can get into a trade. If it starts bending over like this, that's a disqualifier. All right. So the market is going up. This is why the market's giving you a little grief here. It may go up in the end, but the reason why it's doing it is because of this. Okay. All right. Another point to make about the DOM. We are long. Not only do you see it in the DOM, you also see it here on the chart. What Michael is doing in the room, this is his stop loss. All he's doing is dragging and releasing. Dragging and releasing the stop. That's all you have to do, all right, to move the stop up. And then I'm just going to get out. Okay. The rule set for the money management part is if the market goes plus 4 ticks in your favor or closes on the other side of that MA1, that's that buzzword here, the red and blue line, you move to stop, you move the stop to break even. Break even is your entry. If you're brand new, that's what that means. Okay? So all he's doing is moving the stop up and releasing it. Moving it up here. It went almost 4 ticks here. Moving it up, okay, to break even. You're getting the risk off the table. Okay? Again, this is going up. You're feeling good about yourself. The grief here was a problem. Okay? But a lot of times this backfires on you. Okay? So I'm just going to get rid of this, and we're going to go somewhere else. Okay? So again, a recap. Market needs to be trending. Get in the habit of zooming out. Also, get in the habit of drawing a trend line. Always draw that trend line as we start gravitating toward the BBC. The reason we're doing that, we never know if it's going to get to the BBC. And number 2, if the cycle turns color on us, right? All right, then the trend line is required, and you need to draw it anyways. And if it starts turning against you, that's not good for the home team. Crude oil. Okay. Trading sideways. You guys all agree with me there? Okay, we got double bottoms here, double top. Look at the dynamic support and resistance. Okay, they're side by side. Notice the first thing I do is I zoom out a little bit. So the crude right now is just messy. All right, so we're not going to touch the crude for the moment. I'm going to turn to natural gas. Okay. That looks pretty good, right? We have the bearish cross here. We're getting the pullback to the BBC, and I'm drawing the trend line. Okay. If the high is, okay, so here we go. We're going to see if this qualifies. If we get a down close here, okay, it should qualify. All right, so here's what I did. If the high is 463.6, then the low should be 463.10. Why we're not filled, I don't know. All right. I put the trade on here with the down close against the BBC. Okay. I want to point something out. Okay. Number 1, once I did that, the stop was put in automatically, 463.80. Okay. That was the down close. Okay. I drew the trend line. No, we didn't close below it. But as I said earlier, what did I talk about? Get in the habit of zooming out. Okay. have support over here. This double bottom right now. So this is not surprising. We found support and we pulled back here. All right. I'm pounding the whole zoom out thing for a reason, because this is a trap you'll fall into. Okay. Take a few minutes to hit the zoom out button. It's going to make a difference on whether you're making or losing dough. Okay. All right. That being said 100 times over again, we did get a clean pullback to the BBC and we did have a down close. Sometimes when you get that down close, you are going to get, put in a situation where that cycle turns on you. It just happens. Okay. You're just going to have to deal with it. All right. But we are short. I did it just to, again, show you how to execute it. Joe and the guys that are brand new, what I did was I left click in the red to create a short. And as I said, this little triangle here with the stop losses here activated 8 ticks away allowed a stop to be automatically placed for me. So I didn't have to do any extra clicking. All right. So now all we're doing is we're waiting for the market to go down and close on the other side of this MA1 or go 4 ticks in our favor. So if we sold it at 63, if it goes to 462.6, 4 ticks in our favor, all right, we'll move the stop to break even or where our entry was. Okay, that's what that means. Okay, as I said earlier, I highlighted this double bottom here because that's why the market, I think, is kind of trying to figure out what it wants to do here. Okay, so the question goes back, are we trending? Under a microscope, right, that looks very good. Okay, that looks appetizing. Okay, this, all right, we may have some issues. All right, so let's see what happens. Just give it a few moments here and we'll if it goes down, then I want to at least trail the stop and show you how to do that for the new guys, okay? All right, so hold on. If we get it down close here, we're going to have to move the stop down anyways. What does that mean? Probably end up being stopped out at break even anyways, okay? Because we certainly don't want to see this cycle start curling up in blue, right? That is not going to be good for our short. We want everything to be the same color, right? Red. Now it's turning blue on us, so now it's going to give us some grief. So let's see what happens. Got a feeling sound like Michael this afternoon. I'm losing my voice. All right, let me pick up this line. 1 second. William, can I call you back? I'm in the middle of a webinar. But the 10-year note's at 119.10, so it looks like it's starting to head down, so that looks good. Yeah, that's what we wanted to see. But yeah, I'll call you back in about 30 minutes. Okay, bye. All right. So again, okay, you guys understand why I drew the trend line. Okay, we drew it. That was a nice, simple trend line to draw on. Bottom of the wicks, or the corner of the body, that is the close below the MA1. Okay. I'm just going to close it out. Okay. All right, we're going to go to the next one. I moved it to just close it out because we closed below the MA1. The stop would have been at break even, and guess what? That's where we got short. So there was a few ticks lost because why? Maybe we weren't really trending. Okay. Again, watch the traps. All right, let's go back to crude. If we're in crude energy complex, are we trending? No. Nothing's changed here, so stay away from the crude. Let's go to the indices. As we warned about earlier, look at this, right? Get hypnotized by this long. And we see this, right? That's the one we were talking about. And look at now the market's now just trying to figure out what it wants to do. So for the moment, the indices are off the table until what? We make a higher high. The market needs to be trending, so we better get over this high. Okay. All right, we're going to go to, let's go to a currency. Let's go to the euro. Okay, right now we have a bullish cross. Okay, the MA1 is blue and crossing the BBC, that green line. Okay. Do we have any divergence or separation down here? No. The cycle is blue. We like that, but now we need the green line underneath it. Okay, so the euro is in a position to possibly go higher, but it needs a little bit more work to do. Okay, and we're going to be competing against a little bit of resistance there, right? So got to be careful. And if we zoom out, okay, we're going to see we got a lot of bit of we got some resistance here, so we're going to take that off the table. The British pound, again, choo-choo tracks. What does that mean? Okay, look at the green dynamic support side by side and resistance. Okay, not very good. Here's the Canadian dollar. Okay, we had the bearish cross here. That's the MA1 cross in the BBC. That is step number one. Step number two, activate your trend line and start drawing. What's the normal thing for the market to do? Pull back to the BBC. Okay, that's what we're seeing. Zoom out. Do you think we're trending? The answer is no. We are not trending, but again, get in the habit of drawing the trend lines. Okay, get in the habit. Okay, so let me see. Joe's got a question here. Yes. Joe, if you look at the email that I sent you probably this morning, one of the attachments was actually this sheet. This is the rule set, okay? This is kind of the step-by-step rule, okay? The first thing that, before this even takes place, is number one, the market needs to be trending. That is step number one. So if you have a pen and paper, it doesn't matter if you have these indicators or not, the market better be trending. Okay, if not, you're going to get chopped up unless you're using something that's taking advantage of some sideways action. But the market, number one, needs to be making higher highs and lower lows. Number one. Number two, then you can get into the rules. The bearish or bullish cross. Okay, as soon as we get that, okay, then we're looking for the market to do the normal thing, which is step number two, pull back to the BBC. Okay, and in the process of that happening, we're going to draw a trend line like we've been doing. So the videos that I've been recording is going over this over and over and over and over again. And what you're doing is you're training your mind to go through this process. Okay, right now it's a bunch of scribbly stuff. You're trying to gather all this information, okay, and you're trying to absorb it. But as time goes on, it's going to start slowing down, and then you'll be going through the same process that I'm doing, okay? So it takes a little bit of time. So this isn't something that's going to happen overnight. It's going to take time, okay? All right, let's go to the Japanese yen. The same thing, okay? All right, I'm going to go back to the euro. So I switched on you. All right. So the good thing about the euro, we had the bullish cross and we were competing with some resistance here. Okay. I think we've blown through the resistance pretty good. Okay. So now we're looking for the market to do the normal thing, which is pull back to the BBC. Once this market starts pulling back to the BBC, our green line will start getting under the cycle, and we like this cycle to be blue. Okay. Joe, you can use this strategy in any market that's liquid and that's moving. Coffee, cocoa, sugar, cotton, OJ, stay away from those New York markets. Okay. The data is expensive, but they're thinly traded. So no. The indices are a great candidate. The currencies, the gold, the crude, the stuff that you see Michael trading in the room, those are the ones that you'll want to gravitate toward. Not only that, the time frame. We're on a 4-tick range. You can apply the same rules on an hourly chart. Bullish cross, pull back to the BBC, does the normal thing. We look for the up close. Here's the up close. Do we have divergence? Yes, we do. Okay. You can actually use them on larger time frames. But for today's presentation, 4-tick range, once you learn this, you can apply it to larger time frames. Okay. And then you can really be deadly. All right. So look, we had the cross. That's the bullish cross. Now we're looking for that market to gravitate toward the BBC. So in the process of that happening, look, left click on your trend line and activate it. Okay. We're activating it because we don't know if it'll get here, right? So we need a couple red candles. Okay. It takes 2 candles to draw a trend line. Okay. Let's look for 2 red candles. So let's see what happens. Okay. I'm going to switch here. S&P might be doing something here. Okay. I just switched on you. S&P. Okay. Sideways. Very obvious, right? Dynamic support and resistance side by side. Okay. All right. I'm going back to the euro. Okay. So hold on. So now we're looking for the market to pull down here a little. Okay. Joe, grains are a good one too. Soybeans, especially now. All right. So I have 2 red candles. So here, top of the wick, top of the wick. Okay. So now we have a trend line drawn. Okay. Cycle is blue. The green line is underneath. So we have that separation or the divergence. Okay, that separation or that divergence is the 3rd step, right? That's the step here. All right, so now we're looking for it. Now here's the deal. Now here's the advantage of the 4-tick range and what Michael's doing in the room. If the low is 94, the high should be 96. You would right click at 96.5. Take the low and add 5 to it. Okay. Take the low and add 5, and that's your magic number. 113.96.5. So if the market falls apart here, guys, we are not in this trade. But if it takes off, it's going to stop us into the trade, and we're going to go for a ride here, hopefully. All right, 1 second. All right. So we're waiting for the market to come out of the hole here, okay? All right. So if the low has been 93.5, then add 5, 13.96. Did I do that right? No. 93.5. 1, 2, 3, 4. Yeah, I did it right. Okay. So 13.96 will get us long. No, 95.5. All right, well, we're in. All right. So there is the close above the trend line. Okay. 1395.5. We are long from 1396. The reason we did that, okay, we expect the normal thing to happen, which is pull back the BBC. It didn't. It closed above the downtrend line, which kind of lit the match. We have bullish divergence, bullish separation, where that blue cycle is blue. Okay, and we have something, we got bullish here, okay? Yeah, there was a question, they think you missed. Go ahead and ask your question again. Yes, right here, the close above, okay? Now what we're looking for is the market to go plus 4 ticks in our favor, or close on the other side of the MA1, which it did, and so watch. That stop now goes to our entry. And I'll recap what we just did, okay? All right, what do we expect to happen? The green line to get into the cycle, okay? So right now, because we have dynamic resistance printing, okay, I'm going to move it just 1 tick in our favor. So we entered it at 96 even. I have the stop at 96.5, okay? And now we're flat. We're out of the trade, okay? So let me walk you through what just happened, okay? All right, number one, we had the bullish cross. Okay, that's step number one. Step number two, as soon as we have the bullish cross or a bearish cross, we activate our trend line. We do that because we are expecting the normal thing to happen, which is for the market to pull back to that BBC or green line. So we draw the trend line. Why do we draw the trend line? Because if the market doesn't get to the BBC and do the normal thing, but because it has so much momentum, it takes off, we're in a position to take action. The close above the trend line, okay, activates the long, okay? Our eyes are gravitating toward here. As I said earlier, ideally, we want everything to be the same color. Bullish cross, which means a blue MA1. We have a blue MA1. We have a blue cycle. There's nothing else to filter out. All right. It is when this happens, you get in the DOM and you get long. Okay. There's nothing else to do. Okay. The green line is pulling away. Okay. From the cycle. This is telling us the trend is up. The trend is up. Okay. And this little pullback was just possibly a pullback in this ongoing uptrend. Okay. That's what's happening. So that's why we got long. Okay. And in the meantime, we have risk management rules in place, which means if the market goes plus 4 ticks in your favor, you move the stop to break even. If it closes on the other side of the MA1, which is this line here, you move the stop to break even. The break even is your entry. And yes, we do wait for that green candle. Okay? We wait for the close of this candle. Has to be a close above. Okay? Because if we don't, then we'll have to adjust the trend line, and maybe we'll find an example of that. You have to wait for the market to confirm. And you know what? Maybe the market does this, and then falls apart. Okay? Well, that's why we move stops up. We take the risk off the table because we know what normal is. The green line to pull away, and it's supposed to go up into the cycle, and the market's supposed to go straight up. That's what's supposed to happen. But things change, and so you have to get the risk off the table. All right. Let's move on. So in the end, it was a break-even trade. Again, if you're going to go down this path, CFRN, you're going to get a lot of break-even trades. Okay? You're looking for the runner. Okay? S&P is trending now. Notice how we traded sideways and now we broke out. Okay, here we go. Here's my trend line. Yeah. Trend line started like this. This is Joe. This is a perfect example while you wait for the close. Okay. We poked our head above it. Now we're back underneath it. Guess what? Watch what I do here. I'm going to adjust the trend line. Okay. If it closes above here, we're going to get long. Okay, so here we go. We did. Okay. I might have missed it because I was trying to highlight it here. Well, we got it anyways. Okay. So again, it looks a lot like that euro. Okay. By the way, I'm Bert, not Dan. It easily could be confused. Okay. All right, so here we go. That was the close. What color is the cycle? Blue. And the green line is underneath it, pulling away. Okay. So that's okay. So what we want to do, what we want the cycle to do, like it did over here, Joe, see how the green line's pulling away? Guess what it ultimately does? Goes into the cycle, right? That's what we're expecting to happen here. We're expecting this green line to turn up and get into the cycle. And in doing so, what's normal is the market to do this, make a new pivot high. Okay? So let's see what happens. Now, we are long from 2751.5. Okay? I have the stop at 8 ticks away. This bracket here allowed me to do that. I didn't have to push any buttons, do any math. It automatically placed the stop for me. Okay? So here, there is the close above the MA1, right there. So guess what? Follow the rules. The stop will go to our entry right here. So our entry was 51.5. Our stop is right here. Break even. Okay? We're expecting the green line to go up and do the normal thing. Okay? So it's going up, right? That's good for the home team. So, and look at where that green line is. Okay? So watch. Okay, I just took it off at 27.53. All right. So the entry was here, and I got rid of it here. And the reason why I did that is, well, the green line was up here a second ago, but it's having trouble. Okay. So again, I'm going to highlight this one more time because this is a process, Joe, you're going to go through, and everyone else when learning this. Okay. So we were trading sideways here, right? Back and forth, back and forth. If we didn't know dynamic support and resistance, we're giving you that clue. Okay, that's what was happening. It wasn't until we broke out of the range where we said, hey, you know what? Now it's time to get long. Why? Because we're trending. All right. So we break the trend, and this is our first attempt to pull back to the BBC. See where the cycle is right now? The green line's into the cycle. If you're not out of that, you're out of it now. Okay? So this is the first attempt to come back and do the normal thing, which is get back to this green line. In the process, keep going over this, draw a trend line. Because if this market has too much bullish momentum, it won't get there and it'll take off. All right? The good thing about it is everything is the same color. Okay? Bullish close, bullish MA1, bullish cycle, and the green line is underneath it. We have bullish divergence. There's nothing else to filter out other than to get long, take action. So what I did is I went into the green here and I just left click and bought it. Okay. Now the rule set is if the market goes plus 4 ticks in our favor or closes on the other side of the MA1, which is this candle here, you move the stop to your entry. And in the end, as Joe, your question was, what about this cycle slingshot down here? We expect the green line to come up and do what? Close the gap. And it's at this point we close out the trade, and I did it right here. So we bought it here, we sold it here. And guess what the green line should do? Doing what it's doing now. Pull away. All right. The market should do what? Gravitate toward the BBC again. And now we start drawing another trend line. And we try to take advantage of the next move. Because we expect the green line to do what? Pull away and come back up. All right. So it's just a process. All right. So yes, you're absorbing the rules. Okay. You're absorbing the market activity. You know, you're pushing buttons on a DOM. If you're brand new to that takes some time. So again, something that doesn't happen overnight. The guys that are kind of used to platforms, they have an edge because they're used to pushing the buttons already. Okay. What is the red line for? Right in here, the red and blue. Up here, in the slingshot. Red means bearish. Blue means bullish. Okay? That's what it is in a nutshell. Okay? Red means bearish. Blue means bullish. Okay? So if we get a bullish cross like we did up here, ideally we'd like this thing to be blue. Okay? If we get a bearish cross, all right, ideally we want that cycle to be red. Okay? Ideally, the blue line is telling us the trend up. This pullback is telling us this market action. It's just a pullback in this uptrend. That's what that's implying. That's what that means. So we want the green line to be underneath it in a bullish scenario, and we want the green line to be above it in a bearish scenario, because we expect the green line to do what? Travel back to the cycle. We expect the green line to do what? Pull away and get back into the cycle, and to repeat itself over and over and over. This line here, this here? The midpoint? The dark red. Oh, the brown. This is brown. Okay. Red, brown. Okay, now I get it. This is important. That's okay. I get that. This is going to be important for some of the other trades. Okay, that's fine. No, I totally get it. All right, this is going to be important in some of the other trades that are offered. Okay, I have it up there because I'm used to having it up there. Okay, so that's what it is. Okay, so what I would do, I sent you this attachment. Okay, I think this morning. Notice how it doesn't have the brown line in it. This is your focus right here. Okay, the brown line will be something you graduate toward if you. Who's this? Goofy. You'll graduate toward. Okay. So, all right. So that's the scoop. It's over 2 o'clock again. All right. So that's it. Are there any other questions? Again, I'm looking at the crude oil again. We were congesting for a while. Notice we have support here, so we're not going to take any action. Okay. Okay. Crude is still a mess. Natural gas. Now starting into chop action, getting messy. Okay. Joe, perfect example here. Okay, I'll blow it up a little bit. Why is this a perfect example? The cycle is red. We want that green line to be over above it. Why? Because we expect the green line to do what? Travel into the cycle and the market to make a new pivot low. And it's at this point we cover the trade. Okay? That's what we're looking for each and every trade. And along the way, you're going to trail the stop, trail the stop, trail the stop, trail the stop. All right? So that's it. If you're brand new, consider downloading the platform. This is the DTPro platform. It's got the indicators in it. I created a video on how to install it. If you need help, just call me at the desk and I'll walk you through it. If you have questions about the setup, call me at the desk or shoot me an email. Happy to walk you through it. Do you have these sample charts in the package? Do you have these sample charts? These are live charts. This is in a live market right now. This I can, yeah, this isn't after the fact. This isn't playback. This is for realsies. Okay, we were just in a live environment. Look for this in your inbox. If you don't, then send me an email or give me a call and I'll send this to you. Okay, this is your syllabus right here. Okay, and then you'll have more questions. The fact that you're asking questions is a great thing. All right, and yeah, and then we'll go from there. Okay, so every Thursday from 1 to 2 o'clock Chicago time, I go over this over and over and over and over again. Notice the common themes. Is the market trending? Making sure we're drawing trend lines. Making sure the cycle inside the slingshot is in the same color, at least pointing in the right direction. All right. So we just go over the same stuff over and over again. And the idea is to keep you out of the traps. All right. All right. So that's a scoop. So next, I'll see you guys in the room tomorrow morning. And then if not, please join me every Thursday. I'm happy to go over this every hour, for an hour on every Thursday. Okay. This is recorded. As soon as it's finished, I'll do what I'm supposed to do, decode it or whatever, and then throw it on YouTube. Okay? And then that's the end of it. Okay? That's it.